Good morning. This is Unusual Activity powered by Financial Juice. My name is George Avedon.
And I'm Milton Marmonatis.
Welcome. Today we'll be discussing a lot of information going out there. Lots happening on global market, macroeconomic news, geopolitical, overnight markets, a lot of activities. Markets slightly lower today. S&P futures at 1979.50 currently. So what do we do here? Our objective is just to highlight important information that you will need to prepare for your trading day. We'll take you by topic, discuss what we feel is important, and hopefully this will help you prepare for the trading day. So we'd like to get started with the S&P futures at currently at 1979.50, down 6.75. So certainly risk is off. We're monitoring that. And why is that? Certainly overnight, everybody's been hearing about the ISIS attacks in Syria by the U.S. airstrikes with their partners. I'm sure everybody got their uh, push notifications from their smartphones at approximately 9:30 p.m. Eastern Standard Time. Um, so that's having an impact on the future, certainly. Also keeping an eye on the crude oil future at 91.49, currently up 62 cents. So keeping an eye on that. So what's the implication from this? We want to monitor Mideast politics. We want to monitor what the perspective on uh, possible terror alerts, global politics, other geopolitical environments. So it's going to be an interesting thing. Just remember, this just started, so we'll be monitoring this. I'm sure everybody else is monitoring this throughout the world. Milt, any thoughts on that in terms of what the immediate implication for the markets are?
Just basically exactly what you said. We had the Chinese news overnight also coming in with the European news this morning on the flash September readings and the Chinese PMIs. We are currently in a range, I believe, in the S&P, which correlates to the 1980 mark. If that level is able to be supported, we can see a nice little bounce off that number. But currently, from this morning's activity, it seems a lot of people are constantly talking about that key level. If that level is broken, we could see 1950s to 1960s, which could see some pressure on all risk assets. So keep in mind that that number will try to be stabilized throughout the entire day.
Thanks, Phil. So one of the other things that we're always following is economic speakers. Certainly, Esther George is speaking twice a day, once in the morning and the evening. James Bullard, Jerome Powell. Why is it important to listen to them? We look for possible hints of the ubiquitous when is the rate hike coming. There's all kinds of conversation from every news source, from every pundit out there that when is the rate hike coming? What's the implication on the rates? What's the implication on the market? So, again, people listen and read on what these folks are discussing. Um, Also at 9 o'clock today, we're looking for the FHFA housing prices. The consensus is point 0.4, prior point 0.4. And remember, when we're looking for these economic indicators, we want to see if they're within the range of consensus. Uh, when they're out of the range of consensus, that's when the markets get interesting. That's when you'll have the greatest impact on the market from our experience. Um, so that should be interesting. PMI manufacturing comes out at 9:45. Consensus 58.1. Prior is 58.0. Richmond Fed manufacturing at 10 a.m. Consensus 12. Prior 12. Now this is on the heels of, as Milton discussed, Chinese manufacturing lower than expected. German manufacturing lower than expected. Also, yesterday we heard that the Chinese government was comfortable with slower growth. Um, what is the global implication of that? What's the implication on currencies? So again, I think there's a lot of I hate to use the term financial engineering involved, but there really is. We're in a rather large global economy, and um, the implication of every industry and so forth certainly has an effect, but to what extent? Um, so that's what we're expecting from the macroeconomic environment. Just a review of the markets. Asia was down, Nikkei down 0.71%, Hang Seng down 0.49%. You can see in Europe the FTSE still down, and certainly in the U.S. we're continuing that momentum. Um, One thing that is always interesting to me is, does this momentum continue? Will we see a morning uh, lower open, and how do we recover from that in the U.S.? Milt, what's your take on that?
I think basically, we have a pretty decent size POMO today. It's um, it's about a 1.6 to 1.9 billion, which usually comes up about 10 to 15 a.m. Eastern Standard Time. So that, you have that little two-way on the markets. Usually that's probably one of the second biggest sizes of the month. We also have, a few other positive looks at people are looking at. Like I said, mentioned that level of support. People are constantly mentioning that if that level does not break, then we can have some sort of a risk on type move. So it's always good to keep those levels in mind. Once again, it was that 1980 level in the markets. But other than that, we really, as we can see this morning, it's really a risk off type of environment. Nothing really to base that on besides the overnight news that we had earlier. Um, Regarding this morning, equity news wise, we hardly have, going through the list of upgrades and downgrades, nothing really substantial. But we do have a lot of insider purchases this morning. George, you want to go over that?
Absolutely, absolutely. We'll get to that. Yes, insider purchases, and when we run through the numbers, we'll discuss why we think insider purchases are important. So insider purchases. Let's run through the list one by one here. We have MTEX. Uh, MTEX, the chief marketing officer purchasing 1,900 shares at 16.17. MILL, excuse me, let me just having a minor. MILL CEO purchasing 20,000 shares at $4.49. Another director of MILL purchasing 21,696 at 465. POL, we have a insider purchasing 7,000 shares at $35.18. GFN, we have a director purchasing 11,500 shares at $8.51. FISV, we have a COO purchasing 10,000 shares at $32.85. AEO, Apple Eddie Ocean, let's see, what do we have? CEO purchasing 148,000 shares at $14.13. AMH, we have Executive Vice President purchasing 4,000 at $23.54. RH, We have a CEO purchasing just under 26,000 shares at $76.82. STRN, we have a 10% owner purchasing just under 57,000 shares at $5.15. That's STRN. And we have MERC, 10% owner purchasing 61,400 shares at $10.15. Now, why are these numbers important? We feel that certainly these are insiders. So the perception, and we concentrate on the purchases. Certainly there's some cells that can be highlighted, but we do concentrate on the purchases. Why? Because it gives an indication possibly of what do the CEOs know, what do the director knows. So I think it's a great indicator, and we've seen over quite a bit of time that it does have an impact on the overall stock price and volume. And the one thing we take a look at is, what we recommend taking a look at for traders and investors when you see a director purchase is what's the average volume in a particular security versus what the director or CEO is purchasing. What's your feel on that, Milt?
I believe one of the key aspects of insider purchases are the volume, the size of the purchase, the amount of the price that was purchased at, and the position. I think currently the CEO, CFO are one of the key positions to look at. I believe that throughout the trading day, they will have some sort of a support based on those inside transactions, which is why we believe that that is a very positive aspect to trade off of. We believe that throughout the day, you can see certain inside purchases where it could even support the stock to highs and the volume increases, because a lot of people do not understand the value of an inside purchase. An inside purchase is tremendous. It shows basic faith in the company, believes that something is going to happen to support that, the purchase of a certain person in the company. I just believe it's a one to watch throughout the day. I believe that anyone that is interested in those are usually supportive to the stock that is being purchased. So I believe that that is a very key feature throughout the day to keep a close eye on every day throughout the trading market days. George?
Yeah, no, Milt, I think that's a great point, and it's not only immediate impact, but also what's the future impact, and you'll see that it's not just the director purchases, it's the other unusual activity within the security that traders and investors monitor as well, like options and so forth. So and we'll get to that in a little bit. I do want to spend a little bit of time just going over a little bit on the commodity, and bear with me, let me get to that slide. Commodity, energy, and raw materials. We do have, let's see, where we are on crude oil at $91.41, up 54 cents, just off slightly from the highs. Let's see, natural gas up 2 cents. I'm sorry, gasoline up 2 cents, and natural gas we have up 44 cents. One of the things that came overnight was where iron ore was. It did break through the 80, and certainly technicals are important. Plastics are lower this morning. Um, why is this important? This is on the heels of manufacturing being lower in China, manufacturing being lower in Germany. We have Chinese, as we said before, comfortable with slower growth. So we're seeing that impact in the raw materials, in commodities. Certainly crude oil at $91.55, energy. So it's important to note that traders should be monitoring this type of environment in a global higher level sense in terms of macroeconomic view, and also really breaking it down to what's the, how do I trade this? What are the levels? And Milton always talk, Milton is a huge technical analyst, so a lot of discussion around that. Milt, any thoughts on uh, iron ore? I know we spoke about this even before our this show. It is important levels, don't you think? The 80 level and plastics being lower.
Technically, George, I believe it's a very important level. It's always good to keep an eye on support and resistance in any aspect of commodities because in the long run, a lot of technical traders see that as a sell or a buy in basic technical talk. But I also wanted to keep in mind that regarding commodity prices, you have to think about the long run. You have to think about the fact that why are commodity prices getting hit? You said earlier China really basically does not fret over the growth aspect of their country. China is one of the biggest consumers of commodities. So in reality, it may not affect them, but it affects every aspect of the commodity industry, from gold to coal to oil to natural gas to copper to plastics, which have recently gotten hit to iron ore. So they may not see it as a problem, but people as traders can sit back and think to themselves, something is just not right. So what George talked about, levels and supports and resistances, it's always good to keep that in mind because if levels are broken, and if you've been trading for a while, you understand when levels are broken, usually it's a sign of either the downside or an upside, next support or resistance level being hit.
And that's a great point, Milt. One of the things, when we talk about levels, when we talk about technical analysis, it's not just one trader taking a look at the technical analysis. It's not just maybe a firm that's relying on particular technical analysis and levels, as Milton talks about, but it's really algorithms out there, right, Milt? It's when you have certain levels in place, it's not maybe 100 or 1,000 traders or whatever. It's computer-based algorithms, quantitative-based trading that base their trading on these particular support levels. So that's why these support levels are really important, not just from a macro perspective, as we talk about, from a technical perspective, but also a real trading environment perspective. Do you agree, Milt?
I agree 100%. It's been numerous occasions where we've discussed support levels and resistance levels, and clearly once they were broken, it's not a gradual drop. It's a drop of such fierce that you can see 5, 6 handles in the ES futures drop just because of a support level is broken. Why? Because of computer algorithmic trading. And that is the environment we are dealing with today. That's why it's key to have these levels. It's key to have exits and entries in certain equities or tradable securities because you want to be one of the first before a program hits and you sit back and you're like, what happened? So the levels are key. Always keep levels in mind when you're trading in a technical environment. And I believe right now these markets clearly are in a technical environment. Supports, resistance, trend lines, keep those in play every time you put on a position, and make sure you have your exits and entries, and be able to save some money, especially in this type of environment these days. It's very difficult, guys.
Correct. And Milton hit on a great point. The reality is we're in an algorithmic environment. We're not getting away from that, right? So it's more important to adjust to this environment. So and that's what we'll always talk about. I want to spend a little bit of time on the current rate environment very quickly. The 10-year yield at 2.56. I'm sorry, 2.561, 2.551. Excuse me, 2.551. So we're why is the 10-year important? Certainly, we talked about. Excuse me. We talked about the rate environment. We talked about listening to Fed governors and pundits speaking about when rates will adjust. So the 10-year clearly is a, forgive the euphemism, it's a poster child of where the expectation for rates are. So we're still at 2 point, actually we're now down to 2.549. So clearly is a risk off environment. So in a very short tutorial, certainly uh, rates are inversely related, right? So when you're buying treasuries, the rates go down, right? So if you're selling equities, you're buying treasuries, risk off, yield will come down. Okay, so um, definitely yield discussion of rate is important. Certainly in not just in the U.S. but also globally. What's the impact on currencies? What's the impact on exchange rates and so forth? So that's something that traders really should keep an eye on. That, especially in environments and moments like we're experiencing this morning um, with U.S. jets fighting, bombing in Syria. We're now seeing that Arab jets are involved. Um, there's conversation of Iran saying that the U.S. strikes in Syria violate international law. So there's a lot of geopolitical events going in terms of conversations going on. So again, the 10-year yield is absolutely paramount to watch in this environment. What's your feel on that, Milton?
I agree 100%, George. I was just looking over a 10-year chart, and I can just say right off the bat, we have a clear support around a 2.5% on the 10-year, with the resistance level currently about 2.64, 2.65%. Seems like it's a tradable range to keep an eye on. If levels are broken to the downside, I think we can see 2.4% on the 10-year support. It's a very good indicator of global economic feel regarding what is going on, because a lot of a lot of people, even on CNBC, anything you watch, mention a 10-year, 5-year, 2 years, and the impact that they could have on our trading markets. So it's always a good thing to keep an eye on, and basically to respect those numbers. George?
Absolutely. Now, we're going to just jump in a little bit into what we think are interesting dynamics. Now, again, we're anticipating a number at 9 o'clock, right, Milton? We're anticipating the FHFA housing prices at 9 a.m.
Yes.
Now, keep in mind when you're looking at these numbers and when you're looking at what even at let's say we come in at consensus of zero point 0.4. You're looking at, you want to pick out the Home Depots, the Lowe's, um, the home builders. It's really important because not necessarily will they absolutely, react, 100% correlation to these numbers, but it's really important to at least monitor these stocks. Maybe they're in your portfolio, maybe, and um, how you're expecting to trade that. If what's the thought process around that? So one of the things that we do is when when we're monitoring a particular number, have some stocks that you already have set up. If you know that you have the FHA housing prices, have some home builders up on your list. Monitor these stocks, and see what the trade's going to be when the market opens. Is there a pre-market trade? Is there a trade on when the market opens? What's your opinion of that, Mill?
I agree. Every economic number these days will affect individual stocks. When we Prior to a number coming out, the best idea, like George said, is have a group set up, have it ready to go. Keep an eye on it. Home numbers. We have the XHB ETF. We have the individual home building stocks, we have Home Depots, Lowe's. Keep them on your list. See how they act. See how they react. If it's always good to do your homework before a number comes out. Oil numbers. Put up the oil refiners. Put up oil names. It's always good to have something ready to go if you believe the number could affect any individual stock. So I always recommend preparing, even if it's 5 minutes before the number comes out. Get a list going. Go over the expected numbers. Understand what is the outcome. Usually, if it's a good number, you're going to see some positive action on those specific sector names. If it's a bad number, expect something negative. So it's always good to be prepared, be ready, and always be at your desk ready to go.
Eh, eh, great point, Mel. And the thing is, just remember, the housing prices is already when the housing prices come out, this is what people have already paid for their homes. Okay, so just keep that in mind. We have to, uh, you know, keep it at a higher level, just in terms of what impact does it have, who, and also who also is monitoring these particular indices and prices and various economic indicators. That's really important to know. And so that's going to come out in just a few minutes, and once that comes out, we'll review that and see what information is coming out. One of the things that we wanted just to uh, take a peek at and really have a conversation about is Ebola. Now, TKMR has been all over the news, over social media, over uh, regular news, the conversation of Ebola, what's the implication. So, according to the World Health Organization's forecast, more than 20,000 Ebola cases by November 2nd. This is published in the paper on actually today. So we saw, we're seeing action in TKMR. Okay, so again, um, but at the same time, uh, how is World Health Organization? How are they going to use the TKMR's medication for the patients? What's the survival rate? Also, there's another stock out there. It's HEB. It's another biotechnology company that has something for Ebola. But again, this is a lot of conversation, a lot of speculation, if you will. But again, it's in play. It's a stock that is on top of mind when people bring up Ebola. And as we're waiting for this number, let's talk a little bit about what to look for and how to perhaps dissect information when you're hearing. Uh, you want to go to the root of the information. Who's producing the information? There's a lot of information out there, for example, on social media. How do you make sense of it all, right? So there's another stock out there, RWLK, that we're monitoring this morning, quote unquote, eligibility for future rewalkers covered by the insurance company will be assessed on a case by case basis. So we're monitoring that stock as well as we're um, waiting for these numbers to come out. Uh, so, Mil, let's have a quick conversation about, how do traders make sense of information out there? How do they weed out the nonsense, if you will?
Well, that's a very difficult question, George.
It was meant to be. Sorry.
It's especially these days, information is everywhere.
Absolutely.
The question you ask yourself is, how do I find it, and what do I believe is useful? Every trader, every investor has their own feel on every aspect of what they do. Some may like it, some may think you're crazy. But dissecting news, finding news, and trading off of news is in my opinion, an art. You have to do it, you have to believe in it, you have to have no feelings when you trade a specific or any type of news related equity. George mentioned the TKMR this morning on Ebola. That is a trade where it's a lot of speculation. Excuse me. It's a very speculation type of trade. HEB also, NLNK, which is another Ebola type play, is also all speculation. They, in all reality, do not have a cure for the Ebola, but they are possibly the drugs to go to in case there is an Ebola outbreak. So that's why TKMR is up another $2, $3 today. Why? The anticipation, the buying the rumor, feeling that that could be the play to go to just in case there is an outbreak. That's why TKMR is popping again today. So you have to sit back and think to yourself, through every trade, every news-related trade, is that a play that I feel comfortable in doing? If it's not, take a step back. We have 5,000 other companies we can go through.
Absolutely.
If it is, take the chance. Don't take the chance, but do the trade and make sure you have your exits. Every trade that everybody puts on, you have to make sure you have an exit. Don't fall in love with the stock.
Right.
Have your exit, move on.
That's
If
right.
you believe it, great. Take as much as you can out of the trade, and then you take a step forward and move on to the next stock.
That's a great point, Milt. And also one of the things to think about when we look at this global, Ebola, the implication of how things will work out, 20,000 cases, which is just brutal. Um, there's governments involved, right? So what's the implication for the stock from the government perspective, from a global, we always say geopolitical involvement, right? What involvement will the U.S. have in maybe funding, perhaps, I'm not saying that they will, but maybe funding from into TK Morihib or what other stocks? What about other governments? Are they that committed to fighting Ebola? Where's the monetary push from this? That's the way I see it. Where will the money flow for this, right? So that's kind of where I'm thinking. Um, just a quick thing we have coming through on. Let's see. Novavax reports BARDA exercise of contracts options. I'm going to put that into our extends 2-year deal commitment for 70 million. Let me get a symbol on that for you for that.
It's NVAX, Novavax.
NVAX. Sorry about that, guys. So we're going to put that in right now, and that symbol NVAX. So one of the things that we also take a look at in the morning is what's coming out on the upgrades, downgrades, initiates. Why is it important to monitor in the morning? Uh, when we see upgrades or downgrades, that's an analyst based on their own research and what do they think of the particular security, whether they're upgrading or downgrading. Also, one of the things, so for example, TCK, it's been upgraded to outperform from market perform at Bernstein. So one of the things that we look at is what is the track record for Bernstein in general. And that's what really traders want to do. That's what they really want to take a look at in taking in upgrades, downgrades, initiates. Are they the first to upgrade this particular company, or are they the ninth? If they're the first to upgrade, you'll have a little bit of a greater impact on the volatility in the security, the volume, price, and so forth. If they're the ninth or 10th, um, maybe it won't have such a great effect on it. So that's something that we take a look at as well. Let's talk a little bit about why traders should watch upgrades, downgrades, not just in the pre-market, but also during the market hours, right? I mean, it's really important to monitor.
It is. It's a when it comes to upgrades, downgrades, initiations, it's very difficult to understand the reasoning behind each, change on what analysts do. What I believe is these guys do their work. They sit there, they make phone calls, they visit companies. They, their livelihood is that company or that sector. Certain companies, further down the run on other shows, will go over on, you know, what companies are best in what sectors. Certain companies, maybe you have an SJ Cowan going out in a bio, which is very a positive because SJ Cowan is a company that focuses just on certain maybe biotech stocks. So it's a good feel to understand the company, the company they're rating, and the rating change that they do. It moves stocks. You can see it throughout the day whenever a stock is being upgraded or downgraded intraday. You can see the movement that it creates. So it creates volatility in certain names. But it's also important to understand that don't base an investment off of a analyst update. Always do your own due diligence. Always do your own work when you're going to invest in a company or invest in an equity. It's in the end, it's your money. It's the money you're running. It's your decisions that are going to affect your performance. So it's a good indication when you sit back and read over analyst reports or analyst comments. It's a good indication, a good feel on what they believe could affect that specific company, but it's not something where you should finalize the decision on. Always do your own work, always do your own due diligence, and then decide if you want to put some money to work in that specific sector or stock.
I agree with that, Milton. And the overriding theme on this is subjectivity, right? So it's very rare that you'll get a truly objective uh, perspective on a particular stock, uh, view in a particular market, maybe more macro, an ETF, an indice, rates. There's always some level of subjectivity, right? And I think Milt hit it right on the head where traders absolutely have to do their due diligence. And that it makes a good trader, it makes a good investor, it makes you a more, pardon the expression, more wholesome. You have a better comprehension of what's happening in the marketplace. What I'd like to do is to move into some of the filings. We just put this up here. Um, what are filings? Filings are based on an SEC form that a particular investor takes or exits in particular securities, right? So, and these are rather large institutional level investors, right? So, for example, and we'll run through them, and then we'll have a conversation about why we think it's important. So, for example, ASTM, Great Point takes a 9.9% stake. ALTV, Juniper takes a 9.1% stake that was back in August. CRNT, Migdal, 4% stake. SSW, Tiger Container Shipping, 7.4% stake. And we see YRCW, Carlisle exits stake. So why it's important? So it's not just an investor; it's an institutional investor. Not only that, we're in the time of activist investors, right? What else are these individuals thinking that we're not perhaps privy to immediately when they take such large stakes? So we'll expand on that a little bit and why it's important to note that. One of the things that uh, I always do is take a look at when the accumulation of the shares happened, and what's happening with the shares over the length of time. And I think that's really important. Um, so, and that's something that I think all investors and traders should keep an eye on. Um, not just when the stake is taken, but what's the response within the markets, and what actually happens to the particular security. What's your feel on that, Mel?
I agree 100%. I think whenever you see the filing is called an SC13D. Whenever you see a filing come out, with a company either upping or lowering their stake in an equity, it's always key to understand why you believe that happened. We all know when a Carl Icahn or someone like Third Point or Loeb or someone, whenever someone comes out with a comment or when they reveal a stake in the company, we know the action that occurs. So it's something to always think about and always understand what you believe the reaction will be. I'll give you a perfect example. Yesterday, with Herbalife, we had commentary that Carl Icahn was selling a piece or selling his position in Herbalife and taking the loss in a way. The stock went from $41 to hitting a low. Give me a second. Let me just check this one out. Hitting a low of 38.63. Why? Because Carl Icahn was rumored to be selling his position in the stock. That action alone shows you that the words and comments and the buying and selling of activist investors, large hedge funds, large mutual funds can affect and does affect the trading of stocks intraday or even down the road. So sitting back and looking over the morning, filings to see and understand what companies are doing what, it's a good indication, a good feel to get to that point where you can finalize some due diligence on that as well and make your decision on what you think could be the outcome. YRCW, Carlyle sells their entire stake. Why? Was there a reason behind it? That's where the due diligence comes in and you do your work and figure out the real reason. Is it because there was an agreement to sell it, or they sold it because they believe the run is done? That's where the due diligence comes in and your decision is made. But always keep in mind that there are many people out there that can move and affect a stock price. And the decision is always going to be on you to decide whether you are going to join them or you go against them. So that's the reason why the market is what it is these days. George?
No, Milt, I think that's a great point. I think that Herbalife is, yesterday was a prime example of how something can be a simple, an ounce of information, and it becomes a melee. Stock was immediately sold, and the conversation we had immediately when this was happening is, why would a Carl Icahn sell at these levels? Correct? And that's
100% right, George.
right. So he's a very smart investor. He knows what he's doing. Let's take it out of the immediacy of, oh my, I have to respond immediately, to where, hey, let's approach this from slightly higher level. Perhaps it's going to be overbought. I'm sorry, oversold, and we saw the immediate pop in after hours. Correct, Milt?
Yes, after hours, there were actually, I believe it was somebody on Fox Business who came out and said that they spoke with Carl Icahn and he has not sold a piece of his position, which, like you said earlier, we were discussing when the rumor was coming out. Why would Carl Icahn, who had over 100% profit on the name, take a eventual loss? So it's, like I said, it's instincts, it's common sense in a way, but a lot of people took that heat and the stock dropped $2. Not just gradually, it literally dropped $2 in a matter of minutes. And we sit back and think to ourselves, what is going on here? Why would Carl Icahn do something like that? Lo and behold, after hours, boom, they came out. Carl Icahn, through credible sources, were saying that he did not sell his position. The stock popped back up to 41.50 and currently trading at 41.57 pre-market this morning.
Correct. And again, this goes back to our conversation of, do your due diligence, do your homework. Just because a stock is reacting to something, yes, it's reacting, and yes, it could be in your portfolio, and yes, it could be hurtful or gainful, but have a good mindset of, that information that's coming out is there's an ounce of subjectivity to it, and have your own subjective thought process in how they in how you're approaching a particular a short-term swing trade or a longer-term investment. So what we'd like to do now is just to get into, we have on the slide here syndicates. What are syndicates? These are secondary offerings. Um, these are companies that are seeking more financing. It could be a mixed shelf. Sometimes you'll see something called a mixed shelf. A mixed shelf is a it's a combination of stocks and bonds and various other financial instruments that they have there is an investment bank um, that's helping them out with the offering or mixed shelf and so forth. The main thing to really look at this is as we're running through it, is it accretive or dilutive, right? What's the end result here? So when you're offering more, for example, in this AVNR, you have a $200 million stock offering. Clearly, there's more shares available, right? But what's the long-term implication on the particular security? So we have AVNR 200 million stock offering, ALIM $35 million common stock offering. GEL 4 million units reoffered at $50.71. Where is Joe right now? Bear with us here. Um, so we're looking at, okay, what is it? $50.85 in pre-market. Um, WPC underwritten offering of 4 million shares. So again, that's what you want to take a look at is what's the impact on the stock on the immediate side? Will we see maybe in a few days an upgrade or a downgrade on the particular security? What are the larger institutions doing with the particular security? So again, it's just the beginning. Just because someone has a particular news, whether it's a tweet, it's not just in the now. It's what's in the longer term, in the swing trade, in the longer term type environment that you always want to take a look at. Um, just a real quick check of the S&P, and we'll get back to the syndicates. I'd like Milton's view on the syndicates, but we'll take a look at the S&P, the futures. We're at 1980.50. This 1980, as Milton keeps on saying, is a level to keep an eye on. It's a level. So Milton, talk a little bit about that level in the 1980, and we'll swing back into the syndicate.
Well, the 1980 is clearly being supported. As you can see throughout the morning on the ES futures, we had a drop starting to about like around 1988, 87. Throughout overnight sessions, the drop continued to about a 1980, bounced off the 1980 level, started to trade amongst 1980 to 1981, 82, and consistently traded around that level. Currently, we are trading at 1980, 75. The support is clearly being built there on a pre-market basis. I recommend, keeping an eye on that level to the upside and downside, seeing if they stabilize at that level or continuation of a breakdown or a stabilization with the upside break. I think resistance currently will be around the 1985, 87 level, so that will be something to keep an eye on. Regarding the syndicates, I agree 100%. Syndicates are very interesting to keep an eye on. Whenever a company out there performs a syndicate, clearly the stock drops. Perfect example, AVNR. Did a syndicate yesterday after hours. The stock is currently down about 90 cents pre-market. When it comes to syndicates, it's always interesting to see why and when a company does a syndicate. Clearly, they do it to raise money. So every indication always, in my head, comes to the fact of what kind of companies usually do syndicates, which are usually biotech companies do a lot of syndicates. If a company wants to buy out on the company, they'll do a syndicate. But usually when a company with a small company that usually has a large move, those are the ones to watch. Those are the ones to keep an eye on because those syndicates could be really big and harsh. So, like I said, watch the names that make large moves. Those names are ones that could do a syndication to raise money, and those names you can usually see have syndications usually prior to a very large move in their stock price. Why? To benefit off of that move and raise as much capital as possible to fund future businesses and either drug tests or FDA tests or buying a company out. But always keep in mind that a syndicate is a net initial 90% of the time is a net negative to an equity unless they do it for a specific reason, which they usually will state. Other than that, initially be careful on a syndicate because the feel is they're doing it for a reason. What the reason usually is, they say it, but like I say, always say, and I'll go back to it from the first time I mentioned something. This is always do your work, do your due diligence, and then make your decision. George.
No, great point, Milt. We'll keep on saying this, but adding your own subjectivity, adding your own opinions to particular trades is absolutely critical. Something just came through just about a minute or two ago is OPK. Their Reality Phase 3 trial meets primary endpoints. Let me just bring this into view a little bit better here. With the OPK, Ocean Peter Cathy. So we did see an initial spike in pre-market did go up to $8.67. We're looking at about the 8.50 range at the moment. So as we're beginning to wind down and as we're beginning to get ready for the open, we certainly had a lot of conversation about macro, lots of conversations about geopolitical. Certainly everyone's watching what's happening in Syria and the implication on geopolitics. Our opinion is this is just the beginning, right? It's not that the bombings will just stop today or it's going to continue. Um, Number two, keeping an eye on the markets. S&P 500, the futures are 1980.25. Where oil is 91.22, up 35 cents. Again, coming down a little bit off the highs from the morning. Let's see here. Gasoline up 0.0354 cents. And so we did have something out of CCA, Carnival Cruise Lines. They did report Q3 earnings per share at $1.58 versus $1.44. They did raise guidance. They did report Q3 sales of 4.95 billion versus 4.93 billion. They see fourth quarter estimates at 15 to 19 cents versus 21-cent guidance, and they raised their fiscal year 2014 earnings per share guidance from $1.60 to $1.60, range of $1.60 to $1.75. I'm sorry, from 160, 175 to 184 to 188. Again, just something to keep an eye on. Remember, Carnival Cruise Lines closely followed in the tourist industry. Should be very interesting. In the pre-market, did come up to $42.24. Currently, see here, where are we? 41.83. So we'll see how the morning goes. We thank you for being a part of our morning prep. Our objective is to bring into light information that we feel is important in order to get your trading day ready. So just as a review, a couple of things to keep an eye out on is PMI manufacturing coming out at 9:45, consensus 58.1. Richmond Fed at 10 a.m. And again, we're watching these global markets. We're still seeing European markets lower for the most part. Down, let's see, where are we? FTSE at down 1.73, the CAC down 1.84, the DAX is down 1.34%, all percents. So again, we'll see what the implication will be in the U.S. Certainly treasuries, as we said before, treasury will be very interesting here. 25, let's see, 2.551 seems to be. We'll see if it gets into a little bit of a range here. As Milton said earlier, could we see rates coming down with the latest actions in geopolitical? Also, one thing we didn't want to make sure we bring up is we're waiting to hear more information on the Treasury's thought on the inversion discussion, where inversion is where companies out of the U.S. are buying companies overseas for the purpose of taxes, having a less of a tax burden on these companies. So we may see some implication on pharmaceuticals and various other companies. So we'll take we'll keep an eye on that, and we'll have that conversation in the morning as well. Um, Milt, anything that you're looking for, just to tidy up, anything that you're looking for in the market today, that we can just last few minutes of just conversation and what we're looking for out there.
From what I can see, like I said, it seems like it's a risk-off type of morning. Keep in mind those levels that were mentioned before, the 1980 and the ES futures. Keep in mind that the the president, Obama, will be having a statement, I believe, at 10 a.m. Eastern Standard Time regarding the ISIS action in Syria. We'll get more feedback on that aspect. But as of now, be cautious out there. Be very cautious on any trades you do. It's a very tricky market. Lately, it's always been buy the dips, so it's a good idea to keep that in mind if the level of 1280 is supported. Other than that, good luck out there today. Good hunting, and hopefully it's a profitable day for everybody.
Absolutely, and thank you for joining us. This has been Unusual Activity, powered by Financial Juice. My name is George Avedon.
And I am Milton Marmonitis.
Thanks for joining us, and have a great day. Happy hunting.